Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very much excited to welcome you to yet another promising edition of the Forex Morning Mastery as we are going to be taking a technical dissection of the current market conditions as we head into the last trading day of the month. In fact, days like these are very, very important as they are likely going to be coming in with some volatility or some unexpected situations. And in fact, we do want to prepare ourselves adequately for any trading opportunities that the market presents. So, you are welcome, everyone, and I'm glad to have you around with me. And as we get prepared for today, I would like to confirm if the sound quality is fine. I've been battling with this issue over the last 30 minutes to ensure that we have a better um, sound quality during the session. Please let me know right in the comment section if everything is quite okay. Now, for those of you who are joining us for the first time, you're highly welcome on board, and I'm very glad to have you around with us this morning. You might be asking what this is all about. Well, as technical traders, we usually gather on this platform ahead of both the London and the New York session, where we do come to review our existing positions if we have any, and of course, use the data we are able to decipher from the chart to position ourselves strategically ahead of the London and the New York session as usual. And for those who are watching on the TradingView platform too, you are very much welcome. I'm still trying to get my way around the way the thing works over there. So I do hope that for those of you who are watching from the TradingView platform, I do hope you can hear me clearly. If you can do, please let me know in the comment section by typing in hi. So with that being said, here we will be diving right into the business, and in fact, in anticipation of today's trading session, have done my due diligence. I've run through the current market structure to identify potential trading opportunities using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement of the assets on our watch list. So far this week, we have been monitoring three major assets, which includes the US All Spot, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, on all of these assets, though we had some opportunities during the course of the last 24 hours, most especially the US oil did pretty well as we were able to scoop in over 100 pips on that one, and price is still running there. We are going to be taking a look into that structure. Then we also had the GBP USD and of course the XAUUSD, which are still consolidating at this point in time due to uncertainties around the US economic docket, which everyone in the market is looking forward to the Fed's interest rate decisions for tomorrow. So we are going to be taking a look into this at this point. Now, with that being said here, let's dive right into the business. So I can see your comment. Hiker's Diary, good morning to you. Glad to have you around. Could please increase the sound a little bit? You are not properly audible. All right, so let's see how we can get that better. I think I have all my sounds at the highest volume right now, but let me check the okay, let me do this right here, and please let me know if it's quite okay right now. Please let me know. I'll really appreciate your feedback. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do, of course, is to check on the economic calendar so that we can keep tabs with the fundamental factors that everyone in the market will be looking forward to today. And of course, we know how these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So, based on the assets on our watch list for this week, we want to be looking at features from the US and the United Kingdom economic docket. So, I would like to fine tune all this to capture only the US and the United Kingdom. So, let's see what we have here. So, we take all these other economic dockets out, and then I would like to include the medium impact and of course the high impact event, because I think there are no high impact events for us today. So let's see what we have here. So we apply the filter and let's see what we have. Okay, so for today, Tuesday, October 31st, we have a handful of medium impact event all coming in from the United States economic docket. And the first one here is a labor data, which is the employment cost index. And for those of you who don't know, this is a data released by the Bureau of Labor Statistics, and it is a quarterly measure of the change in the price of labor defined as compensation by employee hour worked. So this index measures this change, and of course it's a very, very important data to give us an insight into the health situation of the labor sector in the United States. Now, from the figures we have here, the previous month came in at 1%, so we're having a consensus projecting another 1% for this month. So there's really been no expected change in that regard. So we look forward to what the actual data is going to be like. Then we also have another feature for the housing sector, which is considered as a sensitive factor to the US economy. So this provides an estimated value of housing market conditions. And from the data we have here, usually a high reading is considered as positive for the US economy. Now, from the previous data we have here, it came in at 0.8% for the month of July. Now, for the month of August, we do not have any figures to look forward to, but I'm of the opinion that prior to the publication of this data, we might likely be getting some consensus figure to compare what the actual data will be like. Then we also have the Chicago Purchasing Managers Index, which is another event which is related to the ISM Manufacturing Index, and it is widely used to indicate the overall economic situation in the United States. And usually a result above 50 is considered as bullish, positive for the United States, and in the long term will affect the US dollar positively. Now, if we look at the previous data for the month of September, it came in at 44.1, which is lower than the 50, which is the baseline for knowing if the economy is good, is buoyant or not. Now, consensus are projecting 45 for the month of October, so we want to look forward to what the actual data is going to be. Will it be just as expected and below expectations? Then we also have the consumer confidence data, which is another event that reveals how consumers feel confident about the economy. And a high reading is also positive for the US dollar. And well, this is a data it's a high level data that gives us an insight into the economic expansion of the US economy. Of course, we really don't have any data here, so we want to see what the actual data is going to be. Maybe in a couple of hours into that session, we will get some data to work with. So these are the events we are looking forward to today. And the most important one here, I would say, is the consumer confidence, the housing price index, and of course the employment cost index, which will be giving us a clues into the interest rate decision that will happen tomorrow. So with all this data here, we will be diving right into the business for today. And as technical traders, we do know that the anticipation of this event has a tendency of influencing the market sentiment, which dovetails to and reflects on the chart as price action. So talking about price action, our first asset for today is going to be the USOILSPOT. And in the last 24 hours, in fact, since the week has begun, the USOILSPOT is the only asset that has given us a significant amount of profit. And for those of you who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. Now, let's go through the details on what is really going on in the market. So as at this morning, we have a sell position currently running with about 110 to 120 pips. And this profit is as a result of a retracement in oil prices, which seems to be driven by an increased open interest and volume. And this indicator suggests that there may be further weaknesses in the commodity in the near future. But I'm of the opinion that the downtrend scenario we're currently witnessing on the US oil is very limited. And the reason why that I think that is simply because of the escalating tension in the Middle East, which of course has a tendency of influencing the emotion of fear as regards to the disruption in oil supply. And if this kicks off, we might likely see another wave of bullish momentum. So we really do want to be very, very careful at this particular juncture in time. Now, let's look at what has been going on here from a technical standpoint since the beginning of the week. And if you recall vividly from what we talked about here yesterday, the first thing we observed on the 1 hour time frame was basically that ascending trend line after connecting the series of higher lows since last week Wednesday. So we had a beautiful ascending trend line that we said we will be using to guide our trading decisions for yesterday. And you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we feel comfortable in a buy position and look out for opportunities to buy. However, if the trend line is broken, then we want to start considering selling. Now, in addition to that trend line was the range, which was one of the major parameters that guided our decisions for yesterday, as we saw that at the beginning of the week, price was initially confined within a range that is between the $84.60 level and the $83.85 area to emphasize the level of indecision at that particular point in time. And one of the things we usually do whenever we see price falls into this kind of range is to exercise patience and wait for a signal, either in the form of a breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And during our live session yesterday, we talked about the breakdown of that support line here, which I told us that this situation here still lines up with that ascending trend line, and coupled with that engulfing candle, there are chances that price will skyrocket to the upside. But the fact that price broke down the support line, we said that we are going to be having a sell stop order below the $83.85 level to capitalize on the downtrend scenario, as if price breaks down that level, after that breakdown, that initial breakdown, it would have broken down the ascending trend line to signal an opportunity to sell. And in fact, we saw what happened about an hour or two into the New York session yesterday. We saw how price did break down both the ascending trend line and the support line of that range. And in fact, if you had missed out on that opportunity, the market was kind enough as it came back to retest the structure to incite a downtrend move. And since that moment, we have been selling the USOILSPOT as we saw price action move over, how many pips was that? Over 200 pips, in fact, before we started seeing the consolidation phase happen. We did a beautiful range that we have here. Now, for those of us who are still in a sell position at this point, I will advise you to secure your position at this point. You know how we do it. Whenever price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses and secure the current sell position. And based on this current structure, the most appropriate zone, I think, that we can move our stop losses to is between the $82.80 level, which happens to be a resistant line as it is right now, and the $83.20 zone. And while we are trying to move our stop losses to secure the current positions, we want to ensure that we give enough breathing space for price action to move around. And while we have a secured position at this juncture, what is going to be our next line of action for today? Well, based on the current structure, for those of you who are with me on my public platforms, you must have gotten an update as regards to how we are going to be managing our positions for today. Now, if you look at the structure closely, you would have observed that since price action got into the zone during the later part of the New York session yesterday, we saw this beautiful consolidation phase, as you will see how price has been trapped or confined, let me use that word, within the $82.80 level and the $82.15 level to emphasize the level of indecision at this point in time. And if we take into consideration the impulsive move that brought us into this area, we are seeing a scenario that's looking more like a downtrend continuation pattern, maybe in the form of a bearish rectangle, where the breakdown of the support line at the $82.15 level will be all we need to join a downtrend continuation. So with this information here, it looks more bearish at this point in time, where we shall be looking out for selling opportunities below the $82.15 level. Now, in addition to this consolidation phase here, I was able to spot this ascending trend line, which I will call a temporary one in the meantime, where it interestingly shares a beautiful confluence with that $82.15 zone. Now, if price at any point in time today breaks down the structure, we are likely going to be seeing a sell-off in this market. So it's quite reasonable that we position ourselves below the structures to capitalize on a downtrend continuation. Now, there are two ways to which we can capitalize on this for those of us who have been part of this profitable journey so far, and for those of us who are joining for the first time. So if you have been part of this profitable journey so far, then you must be in profit, over 100 pips in profit right now. So we can afford to leverage on some of the profit we had so far this week, that is, risk some of the profit we had so far this week to test waters below the $82.15 level. Now, if price breaks down and we have our position triggered and it doesn't work out, we know that we are only risking some of the profit we had made. So for those of us who are profitable, we can place a sell stop order below the $82.15 zone. However, if you are joining us for the first time and this is your first position on the USOILSPOT, then I would advise and encourage you to exercise patience and wait for the breakdown to happen first. Retest of structure for confirmations before you want to be jumping into a sell position at this point. So this is how we are going to be considering an opportunity to sell today on the USOILSPOT. However, you know how we do it in this community. In as much as we're looking out for a downtrend continuation, we cannot ignore the potentials of buyers. Now we have two parameters here that suggest that buyers are trying to break out of this zone. As we can see, we have higher lows giving us an ascending trend line. That is one. Then we also have a platform around the $82.15 level, which of course reveals higher lows in this market. And whenever we notice higher lows, it's a sign that buyers are gradually gaining momentum. And in fact, if you look at what happened here during the later part of the New York session, you notice that we have this candle which closed in the form of a hammer candle, and from a technical standpoint, this type of candle reveals the presence of buyers in this market. So if we take all this into consideration, we cannot ignore the potentials that buyers could also come in. Now, if this is going to be the case here, how do we intend to buy? Now, to make things more clearer for us, I also had this descending trend line after connecting the series of lower highs since last week Friday, which is also going to be playing a major role in the in making the decisions for today. Now, if I am going to consider buying the US All Spot today, I would rather want to see price action take out that trend line. So if it breaks out of that trend line, remember that we are not getting too excited, as we will need some confirmations to happen before we jump into that position. Now, a breakout of that trend line could turn out to be a false breakout, but we will need price action to really validate that the breakout is truly a true one. So to do that, we want to see price action come back to retest the trend line or the $82.80 level, which interestingly shares a confluence with that ascending trend line too. Now, if price comes back to retest the structure and we see that sellers are finding it difficult to break down the ascending trend line, then we want to be in for an uptrend move. Now, there is a caveat to this buy position. So if we ride this bullish momentum after the breakout of the descending trend line and the market retest structure, we do want to be very, very careful around this area. Now, remember that we had an ascending trend line yesterday, which was broken during the New York session yesterday. And from a technical standpoint, when price breaks down a structure such as this, there are chances that we might see price come back to retest the structure that was broken to incite a downtrend move. Now, this is where the catch comes in. Now, if we are buying and as soon as price action gets into this area, maybe around the $84.60 area, or let's say the $84.50 and the $84.60 zone, as soon as price gets into this area, let's ensure that we move all stop losses, secure the buy position, and exercise patience to wait and see how the market will be reacting to the structure. Now, if we begin to see selling pressure below this area, then this could be a retest of structure to incite a downtrend scenario. So if we can mark out a reversal pattern there, then we want to be marking out our neckline to confirm and validate the reversal pattern to join the decline to the downside. However, if price breaks out of the $84.60 level, which of course would have broken out of that ascending trend line, then we want to be looking forward to more buying opportunities. And if price action continues to the upside, breaking out of the highest point for last week's trading session at the $85.50 level, we look out to add more buy positions to our existing trade. So it's very crucial that we allow our structures to mature. And for those of us who are in a sell position, I told us all to move our stop losses accordingly while we exercise patience to see how the market will be reacting to this range. So these are my views on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. And you can as well, I'll be taking the next 10 to 15 seconds off to see if there are any questions. And you can as well use that time to mark out these levels on your chart, as you will be needing them as reference points to guide your independent trading decisions for today. Hello to you, Richard Blackett. It's been a long time since I heard from you. How are you doing today? And glad to have you around with us this morning. So you said of course, I noticed that you haven't been around in this part of the world. We'll be here for a few more months. Okay, so I'm pleased to have you around with us this morning. All right. So I will take some few more seconds to see if there are any questions while we get ready to move on to the next asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD. And though the market has been a little bit choppy in the last 24 hours, but while it's been choppy, it found a new high, which in fact makes our current buy position very, very much intact at this point in time. Well, it's important to consider that the recent decline or retracement may be in play because of the perceived potential US dollar recovery, which is going on across the major assets, amidst the major currency pairs in the last 24 hours. And the concerns about the Chinese economic is also affecting the risk sentiment and in fact supporting the US dollar in that regard. And if we consider the economic features we are looking forward to from the US economic docket, this might likely be impacting the US dollar today. So everyone is anticipating that to see how what the data is going to be like. Is it going to be as expected? Is it going to portray a resilient U.S. economy? Or are we going to be seeing a decline in the U.S. economy today? So this is one thing that will, from a fundamental perspective, that will be affecting the nature of price action for today. But if we are going to be looking at things from a technical standpoint, the current market sentiment is still looking very, very bullish. Now, if you remember vividly, one of the things we mentioned here yesterday, one of the major parameters we mentioned here yesterday was these ascending trend lines which we were able to identify after connecting the series of higher lows. Now remember, we had this major ascending trend line here, and of course we also had the temporary one, which is the lighter trend line that you can see here, which price has respected so far this week. And as long as price remains above this ascending trend line, we have no business considering selling this asset for today. Now, in addition to this ascending trend line, remember we were able to spot a range where we saw price action confined that was within the 1.21330 level and the 1.21060 area to emphasize the level of indecision in the market at that particular point in time. And of course, you know how we use this kind of flat channel whenever price action is caught within an uncertainty. We do exercise patience and wait for either the breakout or breakdown of this range to give us an opportunity to trade. Now, during our live session yesterday, we noticed this buy pressure exactly around the ascending trend line, and we said for the fact that price buy pressure resumes above that ascending trend line, we might likely be seeing an uptrend scenario, and that the only condition that will make us want to consider selling is for price to drop below this ascending trend line, break it down, retest of structure confirming the strength of the sellers, giving us an opportunity to join the decline, which of course never happened. Now, with the scenario we had here, and considering the fact that price remained above the ascending trend line, remember that we positioned ourselves just exactly above the 1.21330 area to capitalize on the uptrend. And in fact, if you missed out on that opportunity, we can see here that the market came back multiple times to retest that structure to incite the uptrend scenario. And in fact, if you are in that buy position right now, you will currently be running with over 35 pips in profit at this point in time. And if you took advantage of the second position at the breakout of the 1.216, you will have about 10 pips running in profit, giving us a total of over 40 pips in profit at this point in time, which is not really bad for an asset like the GBPUSD, which is caught within an indecisive phase in the last couple of months. Now, at this point in time, I will encourage us all to move our stop losses and all stop losses to be moved to anywhere above the entry point, the first entry point, that is between the 1.214 and the 1.21330 area. Remember that we do want to be given enough room for price action to breathe. And in fact, if price will go on to break out of this highest point at the 1.21750, that is taking out the highest point price action has been for this week, I'm of the opinion that the bullish momentum is going to be massive if that breaks out. So if a breakout of the 1.2750 happens today, I want to feel very, very confident in this buy position. So let's see how the market will play out. It's a simple setup we have on the GBPUSD here, nothing complicated at all. Now, in as much as we're looking out for buying opportunities, how do we intend to consider the potentials the sellers also have in this particular market? Now, since we still have our bullish trend line intact, we remain bullish on this chart, and the only condition that will make us start considering selling the GBPUSD today is to see price action break down those ascending trend line. Now we have a level here at the 1.21330 level, which interestingly shares a beautiful confluence with that ascending trend line. Now, if at any point in time we see a situation here where buyers find it difficult to break out of the 1.21750, leading to a scenario where price drops and breaks down both the ascending trend line and the 1.21330 level, then we want to start considering selling. Now, a retest of structure here will be a beautiful opportunity to confirm that we are really good to sell. Then a further breakdown of this major ascending trend line will be all we need to continue adding more sell position to our existing trade. So this is how we intend to capitalize on any potential bearish momentum today. But I doubt if this will happen. But if it does happen, we do want to be on standby to capitalize on that move. So right now we still remain bullish as long as price remains above those ascending trend line. So we still look out for more opportunities at the breakout of the 1.21750 level. If you have any questions regarding what I just explained so far, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds half to see if there are any questions whatsoever before we move on to the last asset on our watch list for today. So if you have questions, feel free to drop them in the comment section, and you can use that time also to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to take this as a confirmation that we are good to go And in that regard, we will be moving on to the last asset on our watch list for today. So the next asset on our watch list for this morning is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, our buy position still continues to struggle in the last 24 hours. Most of the time, we had price running in a losing territory as price action still remains below that 1,997 50-cent level. Well, the recent decline in the price of gold is accompanied by a rise in open interest, indicating the possibility of further retracement in the near future. And remember that we have some support levels like the 1,980 and the 1,900, where price may likely retrace into in anticipation of another wave of bullish momentum. And if we consider today being the last trading day of the week, we are likely going to be seeing some rounding off of trading activities, especially on last trading days like this, as majority want to close in on their position, which will of course reflect on the chart as a retracement to the downside. So this is one feature that I would not want us to overlook while we are trying to analyze the current market structure. Now, another thing that could also affect this current asset from a fundamental perspective is the expectation that the Federal Reserve will remain or maintain its hawkish stance to address inflation. And the elevated US Treasury bond also is not helping matters at this point, as we continue to see the Treasury yield continue to rise, at least in the last couple of weeks. Now, this situation here has increased the demand for the US dollar, which is weighing in on the price of gold at this point in time. As you will see that since the beginning of this week, despite the fact that we are on a very strong bullish momentum, price action has been finding lower highs in that regard, giving us a beautiful descending trend line to work with for today's trading session. And of course, you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we want to look out for structures and patterns that support the idea of selling this asset. And the only condition that will make us buy is for the descending trend line to be broken to the upside. Now, if you look at what happened here, and especially for those of us who are part of the live session, the XAUUSD live window during the New York session yesterday, remember that we bought the XAUUSD at the $1,997.50 level after we saw continued rejection of that potential demand zone by the buyers. Now, the inability of sellers to break through this zone and at the same time break down the ascending trend line we spotted at the beginning of the week. Let me show you quickly. So we had this ascending trend line marked out at the beginning of the week, and the fact that price remains above the ascending trend line and that potential demand zone we identified during the live session yesterday was not able to be broken by the sellers was all screaming the idea of buying this asset. And as a result of that, we decided to position ourselves above the $1,997.50 level to capitalize on that move. Now, for those of us who are not part of the live session yesterday and who are asking how we were able to spot the potential demand zone that we have here, well, what we did was to bring out our Fibonacci retracement tool, run it through the previous impulse leg that started on Friday last week, and then we aimed at our golden zone area, which is usually between the 50 and the 78.6% of that impulsive move. And this was why we have that area between the 1,993 and the 1,984 area, where we said we want to be looking out for patterns and structures that support the idea of buying. It could be a double bottom structure, head and shoulder pattern, or any higher highs and higher lows to join the uptrend scenario. So it was because of this continued buy pressure around this area we decided to buy above the $1,997.50 level. So at this point in time, we're currently running with a loss of about 10 pips thereabout at this point in time. So it's still within that area at this point in time, and I do hope you had enough room for your stop losses. Personally, I have over 100 pips on my stop loss here to give enough room for price action to breathe. So let's see how this is going to play out today. I still hold on to a bullish bias here, and as long as price action still remains above that 1,995 area, I want to feel comfortable in a buy position. And in fact, if we look at the structure here, look at what has happened since the beginning of the week. The week started on a bearish note. We saw price drop into the structure. Price came back into this area, dropped again, but was unable to break down the previous low, giving us signs that buyers are still having a say in this market. And if price comes back into this area, we could be seeing something like a reversal pattern in the form of a double bottom structure. Now, when we have a reversal pattern, the usual thing we normally do is to mark out the neckline of that reversal pattern, which could give us another privilege of adding more buy position to our existing trade. And this level here is exactly on that psychological mark, which is the $2,000 area. Now, you know how important this level is. This level has been a major platform for buying power in the last like about in the month of July, August. It was more of a buying platform, and it has also served as a selling niche for participants in this market. And considering the psychological level, the round figure of that price, it's very important to take note of this level too. Now, if price action continues to the upside and breaking out of the $2,000 mark, I do want to be capitalizing on more buying opportunities here. And if price continues to climb to the upside, breaking the highest level price action has been for this week, which is at the $2,006.50 level, I do want to be adding more buy position to our existing trade. John Alabi is saying that there is issues with the sound quality. Let me check that quickly. Give me a moment, please. Let me sort this out so that we can all be on the same page here. Sorry about this. All right, I hope it's going to be better right now. John Alabi, thank you very much for that feedback. I really do appreciate those kind of feedbacks. Thank you very much. So I hope it's better now. Please let me know in the comment section if the sound quality is better now. So like I said, like I was saying earlier, I will continue to maintain a bullish bias on the XAUUSD as long as price action sits above that 1,995 and the ascending trend line we spotted here. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. Remember that today is the last trading day of the week, of the month, and there are chances that we could see some retracement move happen, which could be as a result of profit-taking activities. Remember that since the beginning of the month of October, price had continued to skyrocket to the upside, finding higher highs and higher lows in that regard. Let me show you the 4 hours time frame so you can see what I'm talking about here. Since the beginning of this month, price has been on a strong bullish momentum. If you had watched my video on the XAUUSD, which I shared during the course of the weekend, you will see what I'm talking about here. So since the beginning of this month, we have an ascending trend line in that regard. So it has been a very, very strong bullish momentum. At least this month, we saw at the beginning of this month, price was around the 1,817, 810 area, which was quite cheap enough. And it's quite reasonable that if you had bought at the beginning of the month and price right now is around 1,997, that's over $100 in profit on one single unit of the gold, which is something very reasonable. And of course, you do want to be closing in your position, clocking some profit while you wait to see new opportunities to take advantage of. So because of this idea and psychology that is expected for days like this, we might likely see some retracement phase happen. In fact, it could be a massive one. And for us to be able to capitalize on this, how do we intend to join that momentum to the downside? Well, it's very simple. First of all, we want to see price action continue to trade below those descending trend line. That is one scenario. We want to see price trade below the descending trend line to make us feel comfortable considering selling the XAUUSD today. Now, secondly, we want to see price action break out of this ascending trend line. So if this ascending trend line is breached and broken to the downside, then we do want to start considering selling the XAUUSD. Now, to make things a little bit easy for us to be able to capitalize on that move when it happens, or be able to identify that move when it happens, we want to have a support line to help us position ourselves for the next move. Now, if we look at the lowest point price action has been for this week, it's exactly around the $1,990.60 level. We saw the rejection by the buyers here. We saw another one happen during the early hours of today around this area, giving us a beautiful support line to work with. And if we take it a step further, you will see how that support line also shares a confluence with that ascending trend line. Now, we want to be marking out these levels on our chart right now, as we will be needing it as a guide for trading opportunities for today. So we have it at the 1,990. Hold on a second. $1,990 60 cents. Let me put it at that 60-cent level. So if price action breaks down this $1,990.60 level, price would have also broken down of the lowest point price action has been for this week, and then also broken down that ascending trend line we have here on the 1 hour time frame. So if price breaks down the structure, a retest of structure will be a beautiful confirmation to join the decline to the downside. And if price action continues to drop, breaking down our week's key level at the $1,980 area, we definitely want to be adding more sell positions to our existing trade. So let's keep this in mind. Let's mark out this level, as the tendency of a bearish momentum cannot be ignored, considering today being the last trading day of the month. So let's see how this will play out here. We are at a very critical juncture in the market, and patience will be required. And of course, for those of you who will be part of the XAUUSD live window later today, you will definitely going to be part of how we are going to be managing this position. But if there's anything significant happen before that event, I will definitely share it with you on both my TradingView Telegram platform and of course on the YouTube channel here. So on this note, I think we've made justice to this one. I don't know if you have any questions whatsoever. So if you have questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions. And please, if you have found this content helpful in making your independent trading decisions on all of the assets we talked about today, I'll really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much in advance as you do so. And for those of you who had liked, thank you very much. And for those who have not, please click on the like button. This is the cheapest way you can support this project. All right, I see your comment here, Ika's Diary. Which low time frame, 15, 10 minutes, 5 minutes, clearly shows the price action to enter a trade? I'm not sure I'm getting this. Let me read this over again. Which low time frame clearly shows the price action to enter a trade once price reaches to a key level? You're trying to find a peg that fits the hole, right? Whereas the market does not work that way. So this is where flexibility comes in. It could be the 10 minutes, it could be the 5 minutes, it could be the 15 minutes time frame. So we just want to be as flexible as possible. So when you check your time frame, I have mentioned this countless times. Now, for instance, let me give an instance in this case scenario. Okay, let's talk about the bearish expectations we are looking at in this market. And we are saying here that we want to be selling if price breaks down both the ascending trend line and that key level at the $1,990.60 level. Now, if I want to sell here, depending on where you're at, for instance, if you've been profitable so far this week, like we always talk about, you want to have a sell stop order below that structure right away. But if this is going to be your first time taking on a position and you don't have a leverage to leave on, then definitely you want to see some confirmations to happen. Now, to look out for confirmations, we want to see price break down the structure first of all. Then we scale down into our lower time frame to look out for signs that buyers are finding it difficult to climb back above the ascending trend line. So if we are looking for signs that buyers are finding it difficult to climb above, what does it look like in terms of price action? Well, to reflect this on the chart, we want to see price come back into this area and see that buyers are finding it difficult to break above that level. And what happens when that happens? We see sudden pressure push price to the downside. Every point in time, price is trying to break out of that structure. Sellers continue to push price to the downside. So now it depends on where you see this. You can see it on the 5 minutes, you can see it on the 10 minutes, you can see it on the 15 minutes time frame. So it's very important we are very flexible and dynamic. There is no rule that says this is how it's going to be. We might say this time around, and next week it might be the 15 minutes time frame you see a significant signal. And in fact, it could be the 5 minute you will see a significant signal. So that is where we need to be very flexible. So all we just want to see is signs that buyers are finding it difficult to break out. And if this happens, then we want to be joining a sell, then give enough room for price action to breed by having your stop loss sitting maybe at a previous structure, which will be dovetailing to about 60 to 70 pips in this case scenario. So that is how we are looking out for confirmations on lower time frame. So I hope I make myself clear there, Ike's Diary. I like your questions, in fact, and they are more, it helps others to understand more how the analytical approach works. So if you still have more questions, feel free to let me know in the comment section. So while I wait for your comments, I just want to mention that I dropped the link to the XAUUSD live window in the comment section. So you want to be part of that session. The XAUUSD live window kickstart 5 to 10 minutes into the New York session. And for those who don't know, the XAUUSD live window is a platform born out of popular demand from us in this community, where we come together to monitor real-time price action of the XAUUSD on this platform. So it's a privilege for us to be here together to see how we take new opportunities, how we manage our existing positions, and how we get stopped out in positions too as well. So I look forward to seeing you guys on that platform too. So all right, Micah's Diary, got it. Okay, I'm very glad you got it. You're welcome. John Alabi is asking, how do we identify false breakout? It seems to be very common, especially in the gold. Well, of course, you're right. How do we identify false breakout? You can only identify it when it has happened. That's why it's interesting. So how do we identify it? Well, for instance, let's say we are looking out for buying opportunities around the $2,006.50 level, where we said we will be looking out for more opportunities. And the only way for us to confirm that this is a true breakout or a false breakout, a true breakout will come back and retest the structure. Then you look out, you see buy pressure. It's called transition into double bottom structures, head and shoulder patterns. Then we know that that's a true breakout. Now, a false breakout will come like this: breakout of structure, price action drops below the structure, and we continue to see selling pressure below the $2,006.50 level, where buyers are finding it difficult to climb back above that area. Then we know this is a false breakout. I hope I made that clear. All right, let me know in the comment section if I made that clear. All right. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, I will be rounding up for today. And my last word for you for today, which is please don't make impulsive decisions. That is why we are here during the Forex Morning Mastery, so that we can plan out our thought process as regards how we intend to take advantage of any opportunity in this market. And once we plan out our thought, we mark out our levels on our charts. Let's be patient and exercise patience, of course, to allow our structure to mature before we jump into any position. And let me mention this, it's always easier for those of us who are already profitable to jump into positions, as we have the privilege of risking some of the profits we had made so far this week. So on this note, I wish us all the best of luck, and of course I will be with you on both my TradingView Telegram platforms and YouTube platforms to give you updates as at when due if any significant setup is seen on the chart. You're welcome, Jonalabi, and I'm very glad you found that useful. So on that note, I wish us all the best of luck, and for those of us who are joining for the first time, I do hope we were able to gain one or two things from what we discussed here today. And I do encourage you to be part of a subsequent editions, as the more time you spend with us here, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I wish us all the best of luck and do have a wonderful day. I hope to see you right in the comment section of both my TradingView Telegram platform and of course YouTube channel as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.